Hey, folks, it's almost 8 o'clock. It is 8 o'clock. Rich Golick's here.
He must have been to the bank. He's got a big bag.
I guess. First off, will everyone put their phones on silent, please? And would you join me with a word of prayer, please? Dear Lord, we come to you with our hearts in our hand. Give us strength, wisdom, and understanding, and forgive us from where we fail thee. In Christ's name we pray, amen. Okay, this is probably the earliest meeting I've ever had here on this committee, but it's not. No, this earliest in the session. We don't normally have our first meeting until about the third or fourth week. This is a little different. This is, instead of doing any real official business, we've got a couple of invited guests here to make some presentations to us to kind of get this ball rolling as it relates to what automobile premiums are doing. We passed a law the other last year, the year before, about texting, and you still see people texting everywhere they go. We passed a super speeder law a little while back. We're still catching people going 25 miles an hour over the speed limit. And if you don't believe they do that, get on 85 going south or north, and you're going to have your cruise control set, and at 70, they're going to pass you like you're sitting still. And some of these drivers, I don't see how they make it through the day, but they do, because I see them every day there. But there's some important issues as it relates to private passenger auto insurance as it's impacting the premiums. And I heard a presentation this past summer from Dr. Bob Hartwig. I know he's from the University of South Carolina, so just bear that in mind. But one thing about it, when he moved over there, that's when Steve Spurrier left. So that, but Dr. Hartwig, I listened to him this past summer at a presentation, and it just kind of turned on some light bulbs on the situation that we're in as far as premiums are concerned. And when you get emails or phone calls from constituents, and they say, I can't afford a 25% increase in premiums. Well, fortunately here in Georgia, we got a pretty good system in that there are other people. If you don't like who your carrier is, there are other people, other companies who can provide insurance for you. I was talking to one of our House members yesterday. He said, who's on the insurance committee? He said he had to go get he's got a new carrier now because his premiums went up so high. So these are things we have to deal with. But Dr. Hartwig is a special consultant for the Insurance Information Institute, and if you'll see that little thing up there, you'll on that www.iii.org presentation, you can find this presentation on the internet. I looked it up this morning. There it was under the 2017. But I'm gonna stop talking. Dr. Hartwig has the main stuff that needs to be said, and I hope you really listen to what he's got to say, because it's some really good information. Are we on?
We are on.
Very good. Thank you, sir.
Thank you, sir. Thank you very much, Chairman Smith, and members of the committee, and thank you very much for having me here. As the chairman mentioned, it's a little bit of a reprieve of a presentation I gave this summer when I was still in my previous role as the president of the Insurance Information Institute, but was shortly thereafter transitioning to a role in the academic world at the University of South Carolina. And again, I beg your forgiveness for that. But I don't seem to have had any success improving the lot of the football team at USC. We'll see. All the talent wound up at Clemson, apparently, in South Carolina. So, with that, let me begin here. I do have, throughout my career, spent a great deal of time working on issues related to many types of insurance and private passenger auto insurance, foremost among them, most probably because of the fact that it really accounts for the lion's share of auto premiums written in the United States. In fact, about 37% of all premiums written are private passenger auto premiums. So it is the most important type of insurance to the industry on a national basis. And what I'm going to talk to you today is a problem that we're seeing across the United States, but is particularly pronounced here in Georgia. And this is quite literally an epidemic of very, very serious automobile claims, which are manifesting themselves in, again, what I would call an epidemic of highway deaths in this state. And while we are to some extent seeing this phenomenon on a national basis, it's more pronounced here in Georgia than almost anywhere else in the country, and even more so than in the rest of the Southeast, where it's more pronounced than it is in most of the rest of the United States. So what I'm going to do is sort of paint for you a chain of causality as to why some of this is happening. And then at the end, we'll talk a little bit about there are still some unexplained factors associated with this, particularly in Georgia, that I think are very difficult for anybody here, whether it is the insurance industry, whether it's the Georgia Department of Transportation, to completely understand exactly what's happening. But I do come here from an insurance industry perspective and really from a public policy perspective. We are really a messenger in this particular instance about a public safety issue that is affecting the state of Georgia and, in fact, much of the United States. So if you move to the third slide, basically it's probably on the third slide in the sequence that you have here, and I'll move along on the screen as well. What you can see is that, America is driving more. There's no question about that. We've come out of the recession, and you can see how driving in America plunged during the Great Recession as people lost jobs. They weren't commuting. They cut back on discretionary driving for vacations and such. And you can see how it's really come back with abandon since then, especially over the last couple of years, with the last 2 years being the sharpest increases in miles driven in America that we have seen really since 2000 and even before that. So that's very notable. So not only are there more cars on the road because of record new auto sales in recent years, there are more miles being driven, more vehicles per household, and all of this stuff you hear about Uber taking over the world and people don't want cars anymore, and millennials, all they want to do is walk to work. It's all baloney. Okay, it really is. People love to get in their car and drive and drive and drive. And they are driving more than ever, no matter what you hear coming out of Silicon Valley. Okay, now, in the next slide, you might be wondering, well, why are people driving more? Yes, the economy is getting better. And what I do is I tie together a couple of slides here. In orange, you see billions of miles driven. Again, you see those clearly drop off in the recession. And what I correlate this with pretty tightly here is millions of people employed in the United States. You could see that miles driven tracks employment pretty well, but in in the last year or so, particularly in the last 4 quarters or so, we've seen basically an acceleration in miles driven. And I think that is, as more and more people are employed, yes, they're driving more because they're employed, but that employment ultimately translates into more discretionary income and more discretionary driving. And so you see a very tight correlation here. So traffic density is increasing all around the country, and that is certainly a contributing factor. When people are on the road more and there are more cars per vehicle, per highway mile, it's simply the laws of physics that you're going to wind up with more collisions between them. So if I now take the what I showed before, millions of people employed, and now it's over on the left-hand side of this chart, and I now correlate this with something that's more directly impactful to insurance rates, the overall collision claim frequency per 100 vehicles. So this is the number of claims per 100 vehicles on the road, and you see a very, very sharp increase here beginning in terms of miles driven, in terms of people employed beginning middle of 2011, and then with a short lag, you start to see a very sharp increase in claim frequency frequency. So people have gotten back on the road, and they are involved in not only in absolute value terms more accidents, but proportionately more accidents. In fact, the frequency of accidents now substantially exceeds what it was prior to the Great Recession, which is fairly amazing and goes without a lot of great explanation other than to think of such things as distracted driving, which are a much larger issue today than they were a decade ago. And it's hard to believe the Great Recession began about a decade ago. If we correlate that now in the next slide with, again, billions of miles driven with looking at collision frequency, you see that in the next slide. I'm sorry, I moved to the wrong slide. Oh, yes. One other explanation that has been offered as I move on to the gas slide is many people thought, well, lower gas prices are what might be stimulating driving. In fact, the relationship there is fairly weak. It's really a secondary factor. It certainly stimulates the sales of larger vehicles, but ultimately it's the improvement in the economy that is driving and the associated increase in employment that is driving the number of miles driven more than anything else. Cheap gas prices are secondary. In fact, gas prices have increased throughout 2016 and miles driven have continued to go up. Now, all of this has resulted in terms of a deterioration in the financial performance of the auto line. This is the so-called combined ratio for private passenger auto insurance. And the way to think about this, I'm sure many of you are familiar with it, but it's the ratio of losses and associated expenses to the premium that the insurer takes in. So if you go back to 2005, insurers paid out about 95 cents for every in loss and expense for every dollar they took in. Today, they pay out closer to $1.05 for every premium dollar that they take in. And obviously, that is not sort of the equation that insurers look for when they're underwriting auto insurance. It's not sustainable, but this is being driven by the underlying loss cost trends. It's being driven by increases in frequency and severity of claims that we'll discuss in a minute. And this has had an impact in terms of suppressing the ROEs, or return on net worth. That's the term that's used by the National Association of Insurance Commissioners. The most recent data for 2014, I've estimated 2015, which will be out any day, but unfortunately we're not out as of today. And you can see how that compares to the Fortune 500. So it is certainly not the case that private passenger auto insurers are earning a rate of return that in some way could be considered excessive or unreasonable. In fact, it's about a third of what we see in the Fortune 500 overall. It was much more reasonable back in the pre-crisis era. So it does take insurers a while to try to catch back up and rectify the ROE situation, because insurers' rates reflect the historical trends in frequency and severity, and it takes quite a while for that to ripple through the entire system. Now, I wanted to get into the issue that's the public health crisis really here in Georgia today, and I think that's how we have to think about it, as a public health crisis. If we saw the number of people in Georgia dying from some increases along the lines of what we're seeing in auto insurance from some other cause, like the Zika virus or from something else, we would have the CDC working on this full time. All right. The reality of it is that because it's associated with automobiles, we don't really think about it as much as we probably should. We can see nationally that the number of deaths on American highways is up very sharply, up 8% in 2015 and an estimated 9% in 2016 using the latest data that are available. These are the sharpest increases we have seen in a half a century. This is despite the fact of everything you hear about all these new technologies coming into automobiles that allegedly are going to save us all from accidents. The reality of it is the road to autonomy is a long and bumpy one, okay? And it is one that, in my view, we will not fully realize until mid-century. It is nowhere near reality. So, despite what you hear about Ford, for instance, the CEO of Ford this week at the Consumer Electronics Show in Las Vegas saying they will have what they consider a so-called level 4 autonomous vehicle by 2021, which again is still years away. The reality of it is he's also caveated that it will only work in a relatively small, isolated number of places. And so humans will be in control for quite some period of time. So a very sharp increase nationally in the wake of sharp decreases that we saw during the Great Recession. Nationally, right here in Georgia, what we are seeing, and these are Georgia Department of Transportation statistics, which differ a little bit from some other sources, but I thought I'd go right to the source. Here we see an increase of 262 deaths, or up 22% in 2015 over 2014, and we see another increment of 104 deaths, or up 7.3% in 2016. Those are the latest figures from GDOT, and they are sobering indeed. And this is over the 2-year period of time here is, from what I can tell, is the sharpest increase in the United States. And the deaths on highways here in Georgia are at their highest level since 2007. Here you could see in percent terms the change 2015 over 2014, Georgia versus neighboring states in the U.S. The Southeast has seen a faster increase in auto fatalities than any place else, but more so in Georgia within the region, followed by now my new home state, South Carolina. And yes, we do have similar issues there, and we'll be having similar discussions over there pretty soon. But you could see the increase is nearly 3 times what we saw at the national level. If we look at the first 6 in Georgia, once again, the first 6 months of 2016 versus first 6 months of 2014, these are from another source, the National Safety Council. What we see is a 34% increase in Georgia, 6 months over 6 months. So we'll see how that works out over a 12-month period of time. There's a little difference between the GDOT numbers and the National Safety Council numbers. I think the National Safety Council may, for instance, include such things as various types of pedestrian industry injuries, which may not be included in some of the other statistics. But no matter how you look at it, we're looking at significant increases. You are a leader in the country and a leader in the Southeast region. So that's unfortunate. And this means hundreds of additional deaths relative to just a couple of years ago. So I just wanted to drill then quickly into the issue of profitability, and then I wanted to get specifically into the claim trends here in Georgia. I hinted at the fact that these rising frequency of claims and the cost per claim have taken a toll on auto insurers' bottom line here in Georgia. And if we take a look in comparison to other states in the region, what this is the return on net worth, basically the ROE. In Georgia, private passenger auto over the last decade, for which we have data available, compared to other states in the region in the U.S. I don't think that Georgia shows up all that well. It's the gray line in here, which may be kind of faint on your black and white copy there. But by the time we get to 2014, Georgia is the least profitable state in the region, having been in the middle of the pack for most of the period of time. And I have no reason to believe that Georgia's numbers would have risen in 2015. In fact, I believe they probably would have come down some in terms of the ROE in 2015. And those numbers will be available shortly, and I'll probably update this presentation when it does come out. Let me move along here. Yeah, so there you can see Georgia sits there at about 4.7% compared to 6.2% for the U.S., and it's lower than Alabama and Tennessee, a bit above Florida and Mississippi, but that's because of history, not so much of recent numbers. Okay, so in terms of what is actually happening here on the roads in the state of Georgia, this is literally where the rubber meets the road, and it's these are the exact statistics that insurers pay attention to when they are ascertaining what they need in terms of rate in order to operate with a reasonable rate of return in the state of Georgia. So what insurers are looking at as a situation, and I'll run through the various major coverages associated with private passenger auto insurance. So bodily injury severity would be the first of these. And here you see a pretty sustained upward trend in severity in blue. It's in blue on the screen, and frequency in yellow. Severity was flat in 2016. The data for 2016 only run through the first half of the year at this point. But you could see the frequency trend is up. And in fact, in the 11 years that are represented here, 11 or 12 years represented here, that is the largest increase we have seen in frequency throughout the entirety of this time series. And the severity numbers, which I think is by the time we get to the end of the year, will be in positive territory as well. So what we are seeing is pressure on the frequency side, more claims per 100 insured vehicles, and then the cost per claim rising well. And there are a number of reasons why that severity or cost per claim could rise. A, the accidents themselves are more severe. B, there's more newer cars on the road. Car sales have been strong. Those sorts of things. Higher repair costs can drive up that as well as higher medical costs in the event people are severely injured in these events, in these accidents. And so when we look at property damage frequency claims, so bodily injury claims are when you're involved in an accident and other people are injured. Property damage is when you damage their property. Maybe you're crashing into their garage or into a storefront, something like this. Quite frankly, the severity number here is absolutely off the charts. Almost literally. This is the largest number that we've seen in many, many years, the average cost per claim. And it's very interesting that this is happening. This means that drivers in Georgia are not only killing themselves and other people at a pace that we haven't seen in quite frankly, decades, but they're damaging and destroying property at a pace we haven't seen in the past either. And that is quite striking and amazing to me. We see also on the collision side, so this is the damage to your vehicle in case you're involved in an accident, and you can see that is the highest we have seen in many, many years as well. The average cost per claim is up 9% after rising 8% in the prior year, and we see the frequency of these claims up 4 to 5%. So we would expect to see, with newer cars and more technologies in these vehicles, these cars are supercomputers on wheels. They cost a lot to repair nowadays, and that is part of what is driving this higher the higher severity trend as well. But we are certainly not seeing the sort of benefits you might expect to see with the newfangled cars and collision avoidance and all these sorts of things, because I don't think they've really penetrated into the actual stock of vehicles on the road or inventory of vehicles on the road to an appreciable extent at this point. When we look right here in Georgia and we look at the so-called, we look at a loss ratio, though, so this is essentially, these are what are paid out for claims and the expenses directly associated with claims. We can see how in Georgia, back in 2010, insurers were paying out 57 cents on the dollar. And nationally, it was closer to 68 cents. You could see how Georgia has risen rapidly and now has, in fact, superseded the United States overall, with about 80 cents on the dollar being paid out. So this does not include all of the expenses the insurer incurs. These are just purely associated with the claim itself, don't include any overhead expenses, provisions for taxes paid, and those kinds of things. When you include all of that, that's a number over 100. So you get another sense of what is driving the lower ROEs, and not particularly related to what's going on in terms of miles driven and so forth or employment. We are seeing a slight increase in terms of what amount to mostly weather-related claims and also claims associated with such things as vandalism, theft. Those would fall under comprehensive coverage. And you could see both the frequency and severity up the last couple of years, but the frequency up even more in 2016. So this is a marginal pressure on the rates. This is an optional coverage, but it's not optional if you have a loan on the car or if you got a lease on it. So you have to include that in the cost. So as I conclude, a couple of factors here. We've talked a lot about the increase in employment, the improvement in the economy, more people driving. We've got a couple of other things here where we've seen an increase in speed limits in Georgia in a number of locales over the past year or so, quite a few, in fact, so that the prevailing speed limit is often 65 or 70 miles an hour. And as Chairman Smith mentioned, you could set your cruise control on I-85 at 70, and it's like you're standing still. Same experience all the way out from South Carolina on I-20 yesterday. Now, I will tell you, I did see at least 4 people pulled over by police vehicles on the way over here. But nevertheless, I would say the prevailing rate of speed was between 80 and 90 on the highway all the way out here. And again, more changes in speed limits. So clearly speed limits have something to do with it, and certainly that would be a partial explanation for the very severe claims that we see, particularly those that might result in deaths. But I think we have to fundamentally ask ourselves as we conclude is we have to think about this differently. Again, when I came down to Georgia, I think it was last summer, everywhere in the Hartsfield airport, I saw signs, beware the Zika virus. A lot of public expenditures on trying to keep people safe from the Zika virus. Nowhere did I see a sign saying that as soon as you leave this airport and get in your car, you're far more likely to be killed in that vehicle than by just about anything. And certainly more likely to be impacted by something happening in that car than you were by something happening to you from a mosquito. But people don't think about it. So just to summarize, there are many factors that are contributing to the mounting death toll on Georgia's highways. I mentioned the economic recovery, more jobs, more miles driven, incredible traffic density here in the Atlanta area. To this state's credit, you've had a very strong economy relative to most other states. You have been the beneficiary of demographics in this state, having attracted people in jobs from the Midwest, from the North, Northeast, and at the same time, there has not been a consummate investment in highway infrastructure, for instance, that would reduce traffic densities. Smart highways, these kinds of things. It's having just lived in New York City area for the last 20 years and watching the traffic depart last night and come into Atlanta. The traffic jam was lasting, I think, from about 4 o'clock to about 8:30 last night. It looks like New Jersey out there on the roads in the greater Atlanta area. New Jersey's got nothing on you in terms of traffic density in this area. The difference is it's certainly the case that vehicle size is larger here, for example, and that may impact severities as well. Lower gas prices, a marginal impact, but more accidents, more severe accidents ultimately are going to impact insurance rates. It's inevitable. So in this sense, the insurance industry is simply a messenger of a public health issue. Something that is going on here in the state of Georgia and, in fact, in other states. And insurers, in order to maintain a viable market in any state in which they operate, in any line of coverage in which they operate, simply have to reflect the underlying costs and need to charge a premium that reflects the risks that they are assuming. And those risks, unfortunately, are increasing right now here in the state of Georgia. Again, you will hear a lot about how autonomous vehicles are coming to the rescue. Do not hold your breath. There are a whole lot of caveats associated with that in terms of these vehicles. The changes are incremental. Insurers are studying and investing in these technologies. They have a long-standing tradition of investing in highway and vehicle safety. Insurance Institute for Highway Safety, I'm sure many of you are familiar with. You see car makers crashing them on vehicles on TV there. So insurers have been behind safer cars and safer roads for more than half a century, and they will continue that commitment into the future. But some things are beyond their control, and such things as investments in infrastructure and so forth are among them. So, Chairman Smith, that does conclude my comments, and I'd be happy to take questions now or later if you want to hear from other witnesses first.
Okay, thank you, sir. Cars today are a whole lot different than what some of us learned how to drive in. They're just basically computers on wheels, and they're expensive computers on wheels. I know some of the figures I've seen, like to replace a side mirror for some of the cars now because of the cameras and sensors and all, it costs you $1,000, $1,500 depending on the vehicle you're driving in. So, just a little thing like knocking off a mirror is expensive.
It is.
So these are some of the things we have to look at. I think it all kind of hit the fan this past year when Allstate requested a 25% increase in premiums. But from what I understand too, after the actuarial studies, it was pretty much justified. So it kind of ties hand in hand with what
Right.
your comments to. Does anyone on the committee have a question or a comment they'd like to make? Please push your button, number 11.
That's me, thank you. Just a couple of things for my own information. On most of these graphs, I've started off with somewhere at 0 as my mean to go along that line. I want to know if these increases, and I'm just looking at one right now on weather, is it the increase from the prior year, or is it an increase from that mean of 0?
It's an increase from the prior year in
Okay,
all
'cause
cases. Yeah.
That'll make it substantial. The next one I would ask you is, what is the number one deterrent for speeding, wrecks? What do you think it is? I'm going to give you one.
Yeah, speeding and wrecks, it can depend on the cause. I mean, if we look at the causes as potentially being driving while intoxicated in some cases, I mean, the revocation of a license is pretty effective. We've seen in many states the graduated licensing program for young drivers and pushing up the age at which people can drive, which statistically is when you are at most at risk in your life. Those can have a material impact as well.
And most of these comparisons by state, particularly the ones on the increases over South Carolina or North Carolina, do they take into consideration the number of miles that are in that state of highway, and the only thing that will slow people down in this state is for them to see a state trooper car sitting over on the side of the road. Do the numbers of state patrol in those states per mile, how low are we on that?
I don't know. The numbers that we have here are purely when we look at, say, the frequency of claims. That the annual change in that is basically the number of claims per 100 insured vehicles, and the change in that over an annual basis. It's not in any way adjusted per highway miles. Now, you bring up an interesting point about what will slow down people. It would be a state trooper, and obviously that's the case. Now, a somewhat radical idea is something they've experimented with in some other states, and in fact in other countries, which is basically for the policing of speed to use cameras. Okay, and that is very controversial because people view that as an invasion of privacy, for example, and that's something that the technology is there to do that. There's no question about that, but we've not gone there as a country.
That's a whole lot like a red light camera.
It's very much like a red light camera. People don't like those either.
Well, they're being abused is probably the most reason that people don't like them. You never buy those things. You lease them, and you got to pay that lease, and there ain't but one way of paying it, and that's for me to write you a ticket. Mm-hmm. And I agree. I hate to tell you all this. I agree with probably the majority of the people of this state. You have invaded my private, and I look around this place. I'm far and away the fastest person in here. You put me on that interstate, I think I'm supposed to go. But I think that's and again, I think you get in the South compared to the Northeast. There's a lot of, and I've heard the word yesterday a couple of times, transit issues. People get on trains in Northeast United States, and they might not even have a car. They ride a train to work.
Well,
Yeah,
that was
this
me,
is-
sir. Yeah. For 19 years, I worked in Lower Manhattan, and never once did I drive my car to work.
Well, this
Not
is the
once.
South. You know, there's a couple
Yeah.
of things. Don't you tell me when I can drive my car, even though I'm
Yeah.
sitting out here in Cobb County with 10,000 other people doing zero. But don't tell me I can't drive my car. I want to do that. And again, I'm rambling here. One other thing I want to touch on what Richard said. You know, I think that we get out here and we want to make everything safer, the cars and all. But years ago, and not that far back, I don't want to go back to when I was a 16-year-old, but years ago, you could replace a bumper for $50. And what's and when you look at a car, when you have little run-ins and wrecks, the things that get hit are your bumpers. But you could replace that bumper for $25.
And do it yourself.
Mm-hmm. But now, in an effort to make us more safe, you hit a bumper. I used to work for one of these companies that sold automobile insurance. My goodness, a side mirror for $1,000, you can get a bumper and you're going to replace the whole back side of your car because it's one solid piece. And again, it's making me safer, I understand. But I think things like the cost, you want to know why your claims are up? Dadgum, a bumper used to cost $25, now it costs $3,000. It's real simple.
And it's full of sensors now, too. The next generations is basically there's a radar in there and a variety of other things. So it's going to continue to rise.
Just comments from an outsider.
Yeah.
Number 18.
Thank you, Mr. Chairman. Thank you for your presentation. It's been enlightening.
It's not on.
Yeah.
It's,
Y-
the mic's not on. I don't think your mic's on. Yeah.
It should be.
Hello? Try seven.
Okay.
That's close to my age. Good morning.
Good morning.
Thank you for your presentation. It's enlightening and a little bit scary. Can you tell us, these are accidents on highway miles. Is there any breakdown to show accidents in inner city as opposed to accidents on highways?
Yeah, right. These are accidents on every mile of road in the state of Georgia, highway, rural, or what have you. They're insurance data. There may be data, and I don't know if anyone's here from the Georgia Department of Transportation, there may be data that drills down to location by type of road. That is the case at the federal level, and I'd be happy to investigate that for you. I don't know if the GDOT drills down on their own for that kind of data. And then, nationally, they also have cause of death, or I should say cause of the fatality. Was there alcohol involved? Was it speeding? Was it weather-related or unknown in some cases? So I don't have a breakdown associated with that. But it is certainly the case, we know nationally, that areas with high traffic density tend to have a higher frequency of claims. That's not all that surprising, and I would be very surprised to find out that there would be anything other than the case here in, say, the Metro Atlanta area.
And did you look at factors outside of just driving, outside factors such as the number of claims where lawyers are involved today as opposed to a few years ago, that kind of thing?
I did not look at that in this particular analysis. We know that is a driver of cost in some states. It's an issue, but I can't say that I've analyzed the proportion of claims involving having attorney involvement here in Georgia relative to, say, 5 years ago. That'd be something also that could be looked at.
Thank you.
Okay, number 2.
Thank you, Mr. Chairman. Dr. Hartwood, thank you for your presentation.
Thank you.
If you were in our shoes as policymakers, are there some suggestions for us or maybe some directions of inquiry that we can make to try to look at, we've mentioned some, obviously, with one option be put cameras everywhere.
Yeah,
but-
figure that one's probably going to die on the House floor right away. But
any,
so that's
It won't
no,
make
it won't even get there. Won't even get there. Okay, not non-starter. Yeah.
But any other things you can think of that we could investigate and look at maybe
You know, I
trying
think
to do
that,
something about this.
Go back to the terminology I use, that this is a public health crisis, and I think you've got a resource down the road, for instance, the CDC. Now, not that they would necessarily be involved in this, but I think if you look at how they would approach this issue, they would undertake an analysis of what was driving these injuries and deaths. And I think that while we can explain some of it purely by the increase of the number of vehicles on the road and the increased traffic density, I think the public health crisis part of it here in Georgia is what needs to be dissected. And I think with a very careful analysis of where the accidents were occurring, the circumstances of the accidents, the vehicles involved in the accidents, the characteristics of the drivers. Are they youthful? Are they elderly? Are they somewhere in between? I think you could come up with and wouldn't be all that expensive, quite frankly, because I think most of the data are lying around in one way, shape, or form in various sources, to be able to have a fairly solid explanation of what was happening. And then once you have that understanding, then you can take steps. For instance, it's possible that as we come out of the Great Recession, I know this is actually part of it, and I've postulated this, we had a temporary reduction in the number of new drivers who are getting licensed and registered and so on and so forth. Why? The unemployment for youth was high. Millennials were living in their parents' basements, and they were using their parents' cars and so on. Household formation was delayed for many years. In fact, so now that has begun to recover. The younger generation is moving out of the parents' basement. I'm sure you're all glad about that. If some of you have been in that situation, they're getting their own cars and so forth. So you're having a disproportionate surge in youthful drivers on the road. Okay, I think that is potentially part of it. But I think there are many pieces to this puzzle. Right. And I mentioned the favorable demographics here in Georgia. I think that is part of the reason why you are seeing a bit of a surge relative to states in the north, for example, which have actually seen some loss in their population. Mm-hmm. Believe it or not, the roads in New York are becoming somewhat less congested because people are leaving. Okay, coming to somewhere where it's warmer. I don't know if that's a benefit or what, but it is certainly the case here that you've been the beneficiary of a lot of strong immigration, and people bring their cars with them. Yeah.
Yeah. Thank you.
Okay, let's see, number 23.
Thank you, Mr. Chairman. So you touched on it, that we need more data, but is not a lot of this data you're referring to already in the police reports? And we don't, I assume we have a standard police report that all law enforcement's using in Georgia. Every location, the age of the driver, to weather conditions, all that information is already being captured on the police reports.
No, we don't. The insurance industry doesn't analyze police data per se. So the insurance industry would analyze the data that was particularly focused on the cost of a particular claim, and how frequent people are involved in accidents, and certainly issues related to fault. But there are different details that are going to be captured in an accident analysis that's done by the local law enforcement authorities. But there are fairly good federal data available, and I think this comes ultimately from various state sources. So I think that you're correct, that there are data that are sufficient to conduct this kind of analysis available, whether it's from Georgia Department of Transportation, from the Federal Highway Authority, and a number of other sources, including law enforcement, that would get you a good ways along in terms of doing this analysis and better understanding what is, and of course the economic data that's necessary is available as well. So I think you get a good way along in this analysis.
Okay, 24.
Thank you, Mr. Chairman. I have a couple of questions, and one does have to do with, is there any way that your information ties back to the number of and the amount of legal cases that have been settled? I think some of large settlements of auto accidents, sometimes it takes years to go through a settlement process, but has that been factored in at all?
Well, that is included in the severity figure, which is
Okay.
the cost per claim, but I haven't broken it out. So to the extent were there to be more claims where there were attorney involvement, or the claims for whatever reason wind up being open for longer, which can potentially, because of attorney involvement, which can drive up costs as well, that would be a contributing factor. But I would only suggest that that is a contributing factor. But it would take a second. That would need a hard look at that data, and that data would only be captured in data that the insurance industry had.
Okay.
So it would take a second look.
It would have and include outliers in some instances. I realize there'll be
Sure.
large settlements in there. But on another thought process here, does it make a difference in the types of vehicles, whether they're pickup trucks or whether they're passenger cars? Again, as the economy has picked up, we're seeing more commercial vehicles on the road, and quite frankly, we're having a lot more traffic because of the port, which is wonderful on one hand, but has that been factored into this, the increase of the port traffic? And does this bring us to what I think we as legislators will be looking at, is overhauling our transit? Do we need more rail? Truck traffic has picked up. I'm a long driver. I come from South Georgia, so I'm seeing a lot more truck traffic on 85 than I used to see.
And so to the extent that so this is only private passenger auto data, it's not commercial auto data, which would include trucking. I will tell you that some of the same phenomena exists in the so-called commercial auto data, which would include trucks. Now, I will say, however, that when we're talking about fleet vehicles, trucks owned by large trucking firms and so forth, that is an entirely different animal. And the reason for that is there tends to be strong risk management involved in major trucking firms and transportation firms. They would have for instance, professional risk managers whose full-time job is to monitor the fleet of vehicles. They know, for instance, where every truck is and how fast it is going at every point in time. I'm not talking about the independent truckers. I'm talking about the big firms out there, or the Walmarts and so forth that have these sorts of fleets of vehicles. They have actually done a very good job of reducing the frequency of claims associated with the fleet vehicles. And I've had some conversations with risk managers on that, including claims involving deaths with ordinary passenger vehicles. So it is certainly going to be the case that a contributory factor here is increased traffic density from private passenger automobiles, but they share the road with commercial vehicles everywhere and at all times, and there are tragically incidents involving accidents with private passenger and commercial vehicles. And so it's part of it, but again, a contributing factor. And again, that is a very good point. And to the extent that the ports in Georgia are very successful, or transit through Georgia is increasing, that's a contributing factor, but it also ties in with greater economic activity.
Thank you.
You're welcome. Thank you.
Yeah, we've got time for one more question from number 15. Then we have another little short presentation to have.
Thank you, Mr. Chairman. Thank you, Doctor. Really appreciate
Thank you.
your presentation today. In your, trying to ask this succinctly, in your research, have you found that claims regularly come from the same insured customers? I guess, are we looking at claims frequently made by the same customer, or is this are these trends broad across the pool of insured?
Yeah. So let me answer that two ways. Yes, it is absolutely the case that a customer who has a claim is statistically more likely to be involved in another claim than someone who has not been involved, who has not had a claim. That's why you as an individual, if you have an automobile insurance claim, your rate may well go up. And the reason your rate is going to go up is not because the insurer is trying to make up for the money it had to pay out in the claim that it just paid on your behalf. It's because you are statistically more likely to be involved in a claim going forward. So it's absolutely the case that there are certain demographics of individuals who are, such as youthful drivers, for example, males, for example, are more likely to be involved in accidents than other groups. But this is also the case generically. If you have a claim, or let's just say you have a couple speeding violations, insurers know that you are statistically more likely. So there is a proportion of the population that accounts for a disproportionate part of the total claim filing base, if you will. I think that the second part of your question was, do we see this in general?
Well, I think you've really answered my first question. My second question would be, have you seen, you were positing some ideas or policies you've seen elsewhere that maybe could be considered, and if there is, does the industry have the tools in Georgia, or if you don't know, have you seen policies elsewhere that enable the industry to ensure that those regular claimants, or the people that are regularly disregarding the law, bear the brunt of the expense that they're causing to everybody?
Well, I mean, your last point's a good one. I mean, the reality of it is that in insurance, the way that it works today, your insurance premium is really a message about risk. Okay, you can look at it that way. If you've been involved in a claim, you have some moving violations, you decide you're going to go out and get a Maserati, what have you, you are going to pay more, because statistically, you are more likely to be involved in an accident, and you are going to account for a greater share of the costs. And so insurance is an equitable system. So long as insurers are allowed to pass through rates which truly reflect the risks that they are assuming, and truly reflect the underlying trends in terms of the frequency of claims and the cost of those claims, insurance does send a message about safety. I think everyone does know in the back of their head that if they have a couple moving violations, or if they're involved in an accident, they're going to pay more. They're going to pay more. And so to that extent, insurance is a very efficient system for delivering that message. And so to the extent that insurers are allowed to reflect the underlying changes that I've illustrated here today, and do that in a manner that is quick and efficient, and basically brings that price of risk to that consumer that is involved in more accidents, the faster that they actually see that change in their premium, the more of a reinforcement that is in terms of trying to get that individual back into a pattern of behavior whereby they would have an incentive to move to get themselves back to a lower level of claim frequency. There's a strong incentive effect. Sometimes there's a delay associated with it, but to the extent that insurers can pass through rates to individuals that reflect their true risk, the faster that happens, that's good from a public policy standpoint.
Okay. Dr. Hartwig, I tell you, outstanding presentation. We're going to have to ask you to sit down for a second, because
Sure.
we got Steve Manders from who's Director of Insurance and Product Review. They've asked for about a 10-minute time frame to make a presentation. But as you've heard this presentation that we've just heard, you know, it gives you a lot of reasons on why premiums are going up, and the justification on why they're going up. And but Steve, you asked yesterday to, and as a compliment or favor to the insurance commissioner, we always give you all a little time. Thank you. Go ahead, Steve.
All right.
Yep.
Again, my name's Steve Manders. I'm Director of Insurance Product Review. We oversee the rates, rules, and forms for P&C industry and the life and health industry. So you can see what's going on in the auto industry and Obamacare. I've been busy for the last couple of years. So, but I appreciate the time. We just wanted to follow up on Dr. Hartwig's presentation and give you more of what the department is seeing. We see the stats up on the billboard, but we want to tell you what the department is seeing real time from the companies. 5 or 6 years ago, we were seeing single-digit rate increases on private passenger auto, pretty consistent with Dr. Hartwig's data. Now we're seeing a lot of teens, some 20s. We've got a lot of new filings in at the end of the year. We've got some 20s in there. We're seeing 30s. I've seen some 40s, 48%. So you can see those results, what it's actually doing to the actual rate filings. And so it's putting a lot of challenges on us. And I want to go through a couple of items I'd like to comment on of challenges we're seeing. The number of auto filings are up. In the past, most companies made one filing a year. Now companies are making 2 filings a year because they have 6-month policies. So the number of filings are up. And so again, the percentages are way up as compared to 4 or 5 years ago. We went through this here in Georgia about late 80s. I started the department in 87. About 88, 89, went through a very similar process. Right, Mr. Wilson? And but I wanted to talk to you about a couple of things that we are running into in dealing with these filings. Georgia's general rate filing law is file and use. This is for all lines other than private passenger auto. So we're filing use with a 45-day waiting period. So it gives us a window to take a look at that filing to see if there's a problem with it. If we don't act on it, the company can implement it in 45 days. Private passenger automobile is a dual file system. If you are writing minimum premium policies, you have to make a prior approval filing with the 45-day waiting period. That can be extended by us by 55 days. All your other coverages can be filing used, and be implemented immediately.
Steve, you ought to explain what prior approval and filing use are. Some may not understand.
Okay. The prior approval system is the commissioner has to put his stamp on that filing before it can get out of the office. Filing use is the company can implement based on certain conditions, be it a day requirement, like our general rate filing law is a 45-day waiting period. If we have not acted, the company can legally implement that filing. But what it does is gives us a window to review that filing. Under the PPA system, that filing use filing can go into effect immediately. There's no, we review it, but it's after the fact. So now the trend is what we're seeing is, remember the language I used on prior approval is based on minimum limits policies, not minimum limits coverages. So if an insurance company has elected not to write a minimum premium policy, and say a company writes 25, 50, 30 limits instead of 25, 50, 25, their entire filing now is filing use with no waiting period. We're starting to see the trend of the industry move more and more toward that immediate implementing of filings. And it's putting a lot of pressure on us to get those reviewed and find any problems. Sometimes we find problems, sometimes we do not. But that's something we would like to start a conversation on, is putting our prior passenger auto rate filing system back under our general rate filing requirements under the file and use. I know it's a big issue. It's a big issue for a lot of people sitting behind me. But we feel like we don't have the sufficient time to do a thorough review before these I mean, they can be put in, they can file it today and put it into effect today per the current statute. Another issue is our rate-making standard in Georgia for private passenger auto. Our rate-making standard is a rate cannot be held excessive if there's competition in the marketplace. So we have over 200 companies writing private passenger auto here. We have 0 policies in our assigned risk plan, which is the safety net. Remember, PPA is a mandatory insurance coverage. PPA and the workers' comp are the only 2 mandatory insurance coverages in this state. So I think it puts a little different perspective when you're telling someone and trying to measure a competitive market if they've got to buy it versus a general public going out to the insurance market and buying a policy they need. The state has mandated that this person obtain auto insurance. And the way our private passenger auto rate filing law is structured, it gives the consumer the less protection. A company can structure their filing where that filing can go into effect immediately and there's not a review period. And we're having issues with that. So those are the two main items, Chairman, that I wanted to bring, items that we're having issues with in reviewing rate filings. Like I said, we're get between 400 and 450 true rate filings a year. So that's a lot of rate activity.
Okay. Number 23.
Just a quick question. I was going to ask the question, how many carriers right now competing in Georgia for business, and it's 200.
A little over 200, I believe, yes, sir.
I can't remember exactly when the sort of crisis was going on where companies were pulling out of the state of Georgia because they weren't getting adequate rate.
Right.
I want to say
Well,
it's early 90s.
Late 80s, early 90s. We had companies pulling out. We had companies reducing commissions to zero. They felt like they were not getting, enough rate.
And how many companies were participating in, just a guess?
I want to say over 250 then.
Then.
Yes, sir. We're seeing a few smaller carriers pull out now. We feel like the department's been fairly fair on reviewing the rates. Most of the companies still treat our rate filing law as prior approval. They don't want to implement a rate unless we've given a blessing on it. That's how most companies are operating. But we're seeing the trend of more and more companies needing to get rate, feel like this is the way they're going to go. They're going to not write minimum limits policies and just file and use.
Just a follow-up question, Mr. Chairman.
Yes, go ahead.
So getting back to the late 80s, early 90s scenario where companies weren't, they were leaving the state, wouldn't you say that our competitive insurance company, access to automobile insurance environment much better than it was at that point in time?
Yes, sir, and I think some of it may be departmental philosophy on that too. I think we've been, like I said, fair in dealing with the companies. We remember those days, so we've been trying to hit a happy medium and allowing the companies to get as much rate as we feel comfortable with, and stay in the market. We haven't had any major companies pull out, and so we have worked with all the companies on a very regular basis. Like I said, most of the companies treated as prior approval anyway. It's just this trend we're seeing that's scaring us a little bit.
I got a quick question for you. Isn't this our current system? Isn't it more of a free market kind of system? Somebody, Allstate raised their rates. Since I mentioned them earlier, they raised their rates 25%. Y'all did an actuarial study and said it may have dropped a little bit, but it was justified.
Yes, sir.
But in that same scenario, if my premiums jump 25%, I got over 200 other companies I can contact and say, "What's yours? What's your rate?"
Yes.
But isn't that a
But
kind
I
of
think
more
a
of
key
free
component
market?
is here is private passenger auto is a mandated coverage.
Mm-hmm.
And what if, like I said, we've got a company that's filed a 48%, 50%. Where I sit as a state regulator overseeing the rates, I think that filing needs some scrutiny. And if they turn around and can implement that without a proper review time and the coverage is mandatory, I think there's some issues there.
Okay. Number 3.
Thank you, Mr. Chairman. You mentioned most people, even the most insurance providers, even though they file under file and use, yet they're treating it as if they need prior approval before they begin collecting. as a percentage, what percentage of companies are going under file and use and then going ahead and implementing it right away?
I'd probably say around 10% right now.
Okay. And of that 10%, walk me through what happens if they just go ahead and implement and then they get a notice from the Department of Insurance that's not approved. How do they walk? Generally, do you have any idea how they walk that back?
We don't approve that. That's a file and use filing.
But if they've already implemented that rate,
Right.
have they not already charged the consumer?
Correct. What we would have to do at that point is come back and disapprove the filing. They would have a right to a hearing with the department. The law is unclear what happens in that interim period.
So
whether
the
those
consumer
money-
might just be out of luck for those 6
Right.
months or
Yes, sir.
however long, or 45
Yes.
days.
We haven't gone down that road yet.
Okay. So you haven't had to overturn if someone has done file and use they've implemented it right away, they feel pretty confident it's going to be approved, so they haven't
Yeah.
had any overturned.
Right.
Okay.
Okay, number 24.
Mr. Chairman, can I speak to that?
Come on up, Commissioner.
Representative, in that case, and Steve can correct me if I'm wrong, but we would call for an actuarial study, which we did when Allstate had their what we thought was excessive filing. The actuary would then come back and give us a report. Now, the company has to pay for that actuarial study, but the actuary will come back and give us a report. And if the actuary said that all they can say is it's adequate or it's excessive, if they were to come back and say this is excessive by X percent, Steve, am I not right that we would ask the company then to roll those premiums back to that to what the actuary said was sound, or will we go to a hearing?
We would disapprove the filing for being excessive, but that is to my second point a while ago is our definition of excessive. We've had situations where our actuaries have gone in on some of these filings, not found major rate differentials, but some where the filing could be reduced several points. But they look at our rate-making standards and say, I can't get on a stand and testify that this rate is excessive because your law says a rate cannot be excessive if there's competition. So it's sort of a catch-22 situation is what we're running into.
Okay. Number 24.
Thank you, Mr. Chairman. My question goes to this same issue. If that carrier has billed a client and they've paid a premium and now it's determined that they were charged $100 more, do they get a refund from the carrier?
Our position would be yes, we would fight to get a refund because the rate they used was excessive if it was deemed to be excessive. But that's probably going to be determined after a hearing and after they turn around and take us to Superior Court.
Okay, so it's a long wait, and you've got a lot of folks out there that could have
You could be
overpaid.
all the way through the policy period before you actually got a real answer on this.
All right, thank you.
All right.
19.
Thank you, Mr. Chairman. Mr. Commissioner, I'm glad you come up. I haven't had a chance to ask you anything in a few days. Good to see you, sir. But the point is, Steve, I think you've made is that that's never happened. We've never had an increase going into effect where we've had to go back, and you guys have turned it down, where they had to go back and refund, because I'm 100% sure that if y'all turn one down, it would have to be refunded back to the customer at some point in time.
But I think we're getting there,
Okay.
Representative.
Well, I won't go into that, but two questions. I'm confused. When we were here in '08, I thought we had file and use in place. You had to file your rate increase. It had to go through the office, and then the insurance companies could use it. But I thought when we changed it in '08, it was called use and file. I'm totally.
We had prior approval in '08, and then it went to this that's when it went to the dual system with the file and use and the prior approval for the minimum premium policies.
Okay, so that was use and file. That was basically you just use it. Minimum rates, you could just go ahead and do whatever you want to do at any time with 25 feet.
Our approval on the minimum
minimum.
was prior, okay. I'm
Right.
trying to remember back to
I mean, that's what
08
we're under now.
Right, that's what we're under now, okay. But when they have an increase, when they come in and say we're gonna have, well, 2 points, I guess, and I'll get to a question here in a minute, Mr. Chairman, but a 25% increase is not, that's the average amount they're gonna take with all the customers. So some customers may see a 300% increase. Some can see a 80% increase.
Usually not that large, but yes.
There are
That's
some.
the average. So there's gonna be some that see a 10% increase, and there's gonna be some that maybe see a 70% increase.
Because I can show some that had 2 or 3%, 300% increases on some rates, sure can. But the average is what you're looking at based on their severity and all that. But and the point you're making here that needs to be looked at, that excessive, there is no definition for excessive, I guess is where you're trying to get with what you mentioned before. What do we define as excessive rate?
Right, and
If
we
there's-
feel maybe some language tying it into some type of actuarial standard. You know, some casual actuarial society standard, rate-making standard out there, so.
But you're saying if there's competition.
We don't have any concrete particular language, but these are just a couple of things that we wanted to bring to the committee's attention to get a discussion started.
Okay.
But you said if there's competition in the state, if we've got another company in here that's writing private passenger automobile coverages, then it's hard to define what excessive is gonna be in the language we have now.
According to the law, our interpretation of the law, we can't define it if there's a competitive market. And having over 200 companies offering private passenger auto, you've got the right to say, I'm not going to pay that. I'm going to go and I'm going to shop around. And you know, Clark Howard he says that you're foolish if you don't shop around because your company is liable to raise your rates every year, and you could get a much better rate somewhere else. Now, some of us have been with the same company for 35, 40 years, and that's just kind of the tendency. I guess it's laziness. I don't know what it is, but
Well, you're happy with your good agent.
that's right.
But, yeah, and I had a lot of those customers up until this year that had been with me 35, 40, 50 years. And I like Clark Howard. In most things, he's pretty good, but there's some things he's really not bright on. Telling everybody to go out here and buy a $2,000 or $3,000 collision deductible and $1,000 on comp. That's not smart for all the customers out here. He's not that bright on some of that stuff.
You're digressing now.
I'm digressing. Okay, I'm through, Mr. Chairman. Thank you.
Okay. All right, number 20. Got this and one more question, one more quick question.
Just a quick one. I was interested to hear Mr. Hartwig's presentation. Appreciate you coming, George, and letting us know that we're the highway to heaven now. But we are the largest state with the most road miles and 10th most populated state, so we will have some impact on that. And also the only way to get to Florida from New York and those eastern states. But my question is this. Once we see rates rising due to speeding fines, is there any look back that your department has on those rates being risen, or is there any tables that you have on that?
We don't have any tables. The industry collects that on a company-by-company basis, and when they make their filings, they show the support for what the rate needs to be increased for the different variables.
Okay, so you do have that information, you do
Yes,
review
sir.
that. Okay,
Yes, sir.
great.
Do you have one? Okay. You got another one? Short. Make it quick. Make it quick.
Teen drivers. I was doing after the gentleman's talk, and I appreciate that presentation, sir. That was very good, Doctor. The teen driving deaths, and I was doing a little Googling when we brought that up. Over a number of years, and I guess after we passed what was Joshua's Law and did some other stuff and did more graduated licensing for teen drivers, seemed to be a decrease for a number of years according to what I was able to find here, but it's on the uptick again, and I think it said about 25% of those are associated with alcohol again. But
are we tracking that as our Joshua Law? I know people are fussing about the money not going in for training and things like that, but it seemed to have helped. Is there anything we're looking at that you guys know of to help us with teen driving?
No, sir, I'm not aware of anything. I know some of the companies, some of the rating organizations are trying to track the distracted driving now and,
Right.
and the accidents with the cell phones. And some of the numbers, preliminary numbers, are pretty staggering on that issue.
Yeah, that's-
So, and there's technologies to address that. It's just, we
Yeah.
saw a presentation about 4 or 5 years ago, Commissioner and I, where once you get in that car, it'll basically you won't shut your phone off, but it'll make it go black until you get down below a certain speed limit. Like, you can set the speed. So it gets down below 5 miles an hour, it'll come back on. But there is a way for like teens to have emergency numbers that they can utilize if they need to utilize it. But the technology's there to address the distracted driving. But that's a huge
problem.
huge issue
Thank
to
you, guys.
fight.
Thank y'all. Thank you, Mr.
Okay.
Commissioner.
Well, I think it's been very informative, especially when my colleague here said this is the highway to heaven. That was good. That will probably hang around. That term will probably hang around for a while. Doctor, I really want to tell you how much we appreciate your presentation today. It's outstanding. We want to invite you back because I'm sure there'll be a lot more discussion about both issues from the insurance department and the things that you've talked about. But it has been a real pleasure getting to know you and hearing your presentation both times. We wish South Carolina a lot of luck, except when they play Georgia, especially when they play Georgia. But I think this is the first time, I think, in the years I've been here that we've run overtime. But it was a good reason. So I think the meeting's adjourned. We'll see y'all next time.
Good job, Mr. Chairman. Yes, sir. That was good information.